On May 20th, 2026, NVIDIA reported its earnings for the first quarter of fiscal year 2027, and this report mattered more than most because it tested whether the AI spending boom is still accelerating. The short answer is yes. NVIDIA reported revenue of $81.6 billion for the quarter. That's up 85% from a year ago and about 20% higher than last quarter. Analysts were expecting closer to $79 billion, so this was a clear beat. Earnings were also stronger than expected, with non-GAAP earnings per share coming in at $1.87 versus estimates of about $1.77. Almost all of this growth came from one place: data centers. Data center revenue reached $75.2 billion, roughly 92% of total sales. That tells you NVIDIA is no longer being valued as a gaming or graphics company. It's being valued as the backbone of global AI infrastructure. Profitability is just as important as growth here. Gross margins stayed around 75%. In simple terms, for every $100 NVIDIA sells, it keeps about $75 before operating costs. That level of margin is extremely rare at this scale, and is a big reason investors are willing to pay a premium for the stock. NVIDIA also leaned into shareholder returns. It authorized another $80 billion in stock buybacks and raised its quarterly dividend from 1 cent to 25 cents. The dividend itself isn't huge, but the signal is confidence. What really moved expectations was guidance. For the next quarter, NVIDIA expects about $91 billion in revenue, plus or minus 2%, with margins staying just as high. Management is effectively saying AI demand is still ramping, not slowing. So what does this mean for the stock price? Investors usually think in terms of earnings times a multiple. Based on current estimates, NVIDIA is expected to earn about $8.16 per share in fiscal 2027. If growth cools and the market assigns a lower multiple, you could justify prices around 160. If growth stays strong but normalizes, a 30 times multiple points to the mid-200s. If AI spending stays exceptional and margins hold, a 40 times multiple supports prices above 300. That's why most analyst targets cluster around 290 to 310, with a wider realistic range of roughly 160 to 330. NVIDIA delivered outstanding earnings, guided even higher, and still dominates AI infrastructure. From here, the stock depends less on what just happened and more on how long this level of growth can last.